All right, good evening, everybody, and welcome back to Walks on Wall Street. This is the Sunday night edition to the live stream, or the Markets a Look Ahead stream, where we are going to go day by day and talk about the major events that are going to be happening in the upcoming week on Wall Street. Really quick, I think it's supposed to rain. I think it's actually just starting to rain now, so it's going to be a little bit of a wet live stream. But luckily I brought the umbrella just in case we're going to have to bang that out. But before we start to talk about, all of the events that are going to be coming up this week, I think it's appropriate just to do a little bit of a recap of what happened last week to sort of set the precedent for this week. Now, last week was very important because it was Fed week, in which case the conclusion of the FOMC meeting, Fed Chair Jerome Powell and all the other Fed presidents came to a conclusion that they were going to raise interest rates by 25 basis points. Now, with that decision, that brings the Fed funds target rate to a range of 5% to 5.25%. So Fed funds and interest rates are officially solidly above 5%. Now, it's interesting because if you look at the futures market, it's actually pricing in rate cuts before the end of the year. And if you remember correctly from the FOMC meeting, Fed Chair Jerome Powell said specifically that there will be no cuts before the end of the year. Now, why am I bringing this up and why is it important? Well, we would have to speculate on that, and I'll give you my speculation. Now, if the market is pricing in rate cuts for 2023, even though the Fed chair himself, Jerome Powell, is consistently telling everybody that there's going to be no rate cuts, well, to me, that means the market is pricing in some sort of a systemic black swan event, in which case the Fed is going to be forced to cut rates. Does that make sense? Because if you have the Fed chair repeatedly at not only the last FOMC meeting, but the meeting before that, coming out and announcing that there will be no rate cuts this year, and that if the bond market is indeed pricing in that probability of a rate cut, that the bond market would be wrong. Well, the only reason why the market would then price in rate cuts is maybe they're forecasting some sort of a black swan event, in which case the Fed would be forced to show its hand and maybe start an emergency cutting process. Now, we also had the vast majority of tech companies reporting on Wall Street, with Apple probably the most standout earnings report from last week. Now, it's interesting because Apple pretty much saved the market. Real quick, we're reporting live from Central Park South here, everybody. We are actually inside Central Park right now. We are overlooking the beautiful Extel development of 157. You could see just a bit of the Essex House, the JW Marriott Essex House, and the Steinway Tower. But it's interesting because if you look at all of the data that's coming out of the leading analytics firms, we'll talk about semiconductors in a minute, getting a little bit ahead of myself. But global smartphone sales in general throughout the United States has actually declined 15% year over year. Although, even with that statistic, with smartphone sales declining 15% year over year, Apple actually managed to grow revenues in its iPhone division on a year-over-year basis. Now, it was a beat quarter. Apple did beat analysts' expectations. Right here, this is 220 Central Park South. Look at how gorgeous the front is here. I'm holding my umbrella, so it may be difficult to read the chats tonight. But this is 220 Central Park South, as well as Central Park Tower right in the back. Now, the larger of the two buildings is Central Park Tower, which is also another Extel development. Absolutely gorgeous building. As I've said last night on the live stream, the top 3 floors of that building, yes, the triplex atop of Central Park Tower, is on the market for a cool $250 million, $250 million. So everybody, let's say hello to everybody in the chat. I really do hope everybody had a phenomenal weekend. It's important to take some time to rest, take some time off, regroup. I spent a lot of this weekend reading. I had some time to sleep in, so I had a really good weekend. You know, this building right next to 220 Central Park South is really, really amazing as well. If you look closely, and I'm not sure if you guys could see this on the stream, but almost every single unit in this building has its dedicated balcony. Imagine how gorgeous that would be, you know, to wake up every day with your morning coffee out on your balcony. You could actually see some people out on their balconies right here, and you're overlooking all of Central Park and Central Park South. It's absolutely stunning. Amazing, amazing real estate here at Central Park South. Hey, Felix33 is here. Says happy Sunday night. I see British Gray. Tyree is also here. What's up, Tyree? Good to see you. Username Schmoozername says flagship iPhones are simply, well, let me try to read that, are way too expensive to the average consumer. Yeah, I mean, Username Schmoozername, it was interesting though, right? Because even, I think it's the iPhone 14 Plus, right? Is that the one we're up to now? Even though that is the flagship product and it's extremely, extremely expensive, if you did a deep dive into the earnings report, so here's what I think would be interesting to do. You know, let's actually go out this way, just so I could show you guys a little bit more Central Park South. Now, check this out. There's a category that Apple reports on every quarter, and it's the average sales price per smartphone. Because as we all know, there's many different categories of iPhone, right? Now, the iPhone that we're live streaming on right now, personally, is an iPhone 13 mini, which is an awesome device, by the way. I mean, I would say out of all of the smartphones I've ever had in my life, this is the best one I've had. Now, the only reason why I got the iPhone 13 mini is because I cracked my camera on my iPhone 11. But anyway, I'm rambling, I tend to do that. But Apple reports a statistic, the average sales price per iPhone. And with the new flagship device that just came out, I think it's the iPhone 14 Plus, or is it the Max now? Anyway, you get the picture. There was so much demand for the flagship top-of-the-line iPhone that it actually brought up the average sales price by over $150 this quarter. So it's interesting, you know, you make that comment, and I think you're right. You know, these products are very expensive for the average consumer, but if we think back to a couple live streams ago, we've pretty much been talking about this over the course of the last, I don't know, month or so. In this economy, we've been seeing extreme strength, and I mean really, really big extreme strength in the luxury market, right? We've been talking about LVMH, Moet Hennessy is performing really well. Hyatt, which is a large hotel chain that trades under the ticker symbol H, they just reported a record-breaking quarter in net income on Wednesday of last week. So luxury is actually doing really well. And I think that probably explains why the average sales price per iPhone actually went up by over $150. So it's a good point though. Hey RS, what's up? Long time no see. RS is in the house, good to see you. Richard Vogel's like ramble on, we love it. I appreciate that. I do want to point out one notable building. We are now walking down Central Park South. It's one of my favorite streets in all of New York City. But I want you guys to take a look at these two big towers here. These are the Deutsche Bank towers, formerly known as the Time Warner Center. And as a quick review, if you look at the right tower, I would point to it, but I'm holding my umbrella. The Mandarin Oriental. So now that we're on the topic of luxury and you know, I would say upper income hotels and you just, that market in general is doing really well. Mandarin Oriental Hotels in the right tower to the right. Now 25 Central Park is in this tower, which is actually the residences. So the right side you have the Mandarin Oriental Hotel, which looks like it's a full house tonight, doesn't it? Look at all of the lights on the right side compared to the lights on the left side. Now the left side is the residences, right? These are people who own, you know, $10, $15 million, sometimes $50 million apartments On the right side, those are hotel rooms. But the Mandarin Oriental goes, I think, for like $1,300 a night for the cheapest room. Kind of crazy. Hey, Brick Stonewall is here. Good to see you. My friend Austin City Limits is joining us. Thank you for being a great moderator. Steph UH is here. SME Media. Robert Burns says hello, Tom. Thank you for joining. Abdullah is here. Mohammed. Felix33 says Apple needs to start spending that massive amount of cash that they have. They do. Apple does have massive amounts of cash. You know, we've been talking about. Wait, hold that thought, guys. Check this out. Wow. I'm not sure if you could see that, but look at the ceiling heights of this unit. I've never noticed this before. Maybe they're actually doing a new construction in there, but this looks like that particular unit. I'm not sure if it's a ballroom or whatnot, but those ceiling heights look like they're 20-foot ceiling heights. That is incredible. Let me try to, I'm not sure how good it's coming out on the live stream. Oh, you know what, everybody? That is stunning. That is stunning. I'll quickly describe what this is. It looks like a loft style apartment, and the bed is elevated and it's overlooking Central Park, but it's like this huge awning almost. Now the address is 222 Central Park South, so maybe if you look it up on Zillow or Street Easy, maybe you could actually see the unit, but that is a really unique unit. It looks like the bedroom is pushed all the way to the back, and then it's overlooking maybe the dining room, and then you have that huge wide open window that's overlooking Central Park. That's a really unique apartment. I honestly never even noticed that. And I've been walking down here all my life. Interesting. Guys, here's what I want to do tonight. So I'll give you the quick agenda for tonight as we're passing a really expensive and very luxurious restaurant here. It's actually a Michelin star restaurant. It's called Marea. Has anybody ever eaten here? It's right next to the lobby of 240 Central Park South, which is an amazing building. It's an older building on Central Park South, but this is one of the few buildings on Central Park South that have balconies, which is really, really nice. But Marea is always packed, Michelin star restaurant in Manhattan, and you also have your outdoor dining space too. I think that couple's probably gonna have to migrate inside because it is raining. RS, as you've heard of it, love that. So here's what I think we're gonna do. I wanna take you guys to Lincoln Center. I was actually walking up by Lincoln Center earlier in the day, and it was gorgeous because today in Manhattan, it was 77 degrees. It was bright sunshine all day, and there were so many people out, and the fountain is actually on at Lincoln Center. So I think it's gonna be appropriate. I think it'll be fun to walk up to Lincoln Center, show you guys around, and then we'll head back downtown. Right now we are in the heart of Columbus Circle, Central Park South. Billy Johnson is here, says, hey Tom and everybody, welcome, thank you so much. Nirvana Fan 500 says, a Michelin star restaurant's worth the money. You know, my really good friend, which I actually may tell you guys about this business that we're working on. My friend is a very well-known chef in the city. Very talented guy. He actually used to be one of the head chefs at Del Posto. I'm not sure if anybody is familiar with that restaurant. Unfortunately, it did close down due to the pandemic, but it was one of the best Italian restaurants in all of New York City. Cynthia, thank you so much for your $2 donation. You're very kind, appreciate it. With a comment that says Korea. Thank you for that. Love that. But he then went on to work in a restaurant that's right in the Deutsche Bank Towers. It's called Per Se. Now, Per Se is a French restaurant, very, very expensive, but it is very good. You know, I'd say once in a while, maybe as like a treat, or if you're going on a vacation, or maybe if it's like a wedding anniversary or something like that, I think it may be appropriate, a birthday, something like that. I would say it's worth it. This is the Trump International Hotel and Tower at 1 Central Park West. Now, we've been talking a lot about the big investment banks. Now, why is that? Well, our friend Jamie Dimon over at JP Morgan Chase has successfully acquired, or I should say, picked up the scraps of First Republic Bank. And the reason why I was reminded of that is because if you see this building right next to 1 Central Park West, this is a very, very famous building where many famous financiers have lived. This is called 15 Central Park West. I think it was built in 2008 and is one of the most exclusive addresses in all of New York City. This is home to the former CEO of Wall Street mega bank, Goldman Sachs' very own Lloyd Blankfein. I think he still has his apartment here. There's many well-known private equity guys that also own units in this building right here. And also some very famous athletes. I think Alex Rodriguez used to have an apartment here. Derek Jeter used to have an apartment here. But this building is very well known for finance guys and girls. I also think, aside from finance, I think Denzel Washington still has a unit in 15 Central Park West. Amazing views of Central Park, obviously, and right next to the Trump International Hotel and Tower. Now, speaking of Michelin star restaurants, there is a Michelin star restaurant in this building to the left. But I always pronounce it so horribly, so I'm not going to pronounce it. Hey, Eric is here. Says, Tom, how about... hold on, I think it's like on and off raining, so I'm going to go ahead and close my umbrella so I can read some of the chats. Bear with me one moment. Hey, Hawaii's here. What's up? Good to see you. Michael Joseph says, wonder what incentives Dimon got to pick up the scraps. Well, I mean, he took over all the deposits. He's probably going to make a lot of money on the deal. And I think he's sharing in some of the risk with the FDIC. RS says there is a hotel at the casino. Ah, very nice. Hey, Sam is here. Good to see you. Tony Shepard, welcome. Hey, Razzle Dazzle 786. Long time no see. Hopefully you're enjoying New York. I know that you've made your way over from San Francisco to New York. We're happy to have you here. Trust everything is going well with you. Now, speaking of central banks, we're going to get into the Markets to Look Ahead live stream. So as we know, last week was Fed week. So the Fed funds rate officially has gone up by 25 basis points. But it's not just our central bank, the Federal Reserve. It's global central banks that are raising interest rates. We also heard from our good friend Christine Lagarde over at the ECB. So the European Central Bank decided to raise interest rates by 25 basis points as well. And then next week, if I had to bet, we are going to hear from our friends over at the Bank of England, and I believe they are going to raise by 25 basis points because usually world central banks or global central banks follow the lead of the Federal Reserve, sort of sets the standard for central banking. And this is the main entrance, the roundabout of 15 Central Park West. Now, a little while ago, there was an insane protest here. Look at how cool this shot is. This is 432 Park Avenue. So you can pretty much see all of Billionaires Row. But there was a really big protest, actually, at 15 Central Park West, because it is one of the most exclusive addresses in the city. And I think it was one of those Occupy Wall Street style protests of, tax the rich protests, things like that. That was about maybe 3 or 4 weeks ago now. Let's turn the corner on Broadway and head uptown. Hey, Hawaii is here, welcome. Photos from around New York, thank you so much. Worry says, hey Tom, any thoughts on Workday, ticker symbol WDAY? Yeah, so Workday is an enterprise software company. It really specializes in HR software. So at my previous job, I used to have to do a ton of integrations into Workday. Now, I will say this, because I'm assuming you're talking about the stock. I think it's a good company. However, it's more of a mature enterprise software company. It's not really in its initial growth stages, and it's trading at a premium valuation. So me personally, I wouldn't own the stock, especially here. You know, we did briefly review that, you know, if you think about enterprise software or just tech in general, in this market environment, it's probably going to lag other sectors. Now, there's multiple reasons for that, but the biggest reason that I sort of subscribe to is that if you think about when you're running a discounted cash flow analysis on those companies, the reason why you have had this crazy, it's called a multiple expansion. The reason why, you know, you've had these crazy valuations and a huge multiple expansion in a lot of those names is because we've been living in an environment of ZIRP, zero interest rate policy. So when you're an investor, essentially all you're trying to do is calculate the value of the present value of a company's future cash flows, if that makes sense. That is your job. That is job number one. So what is the present value of this company's future cash flows as we're looking at the Smith? So when the risk-free rate goes up, as it has been doing, I mean, the Fed funds rate has literally gone up 500 basis points in less than 18 months, 10 consecutive rate hikes. That means the present value of a company's future cash flows are worth less now, right? So you're going to have a re-rating, or multiples are going to re-rate. And that's why you've seen a lot of these SaaS companies, enterprise software companies, particularly the ones that aren't profitable. You could think about the ones that are in the ARK Innovative ETF, right? If you think about Cathie Wood, all of those stocks are down like 90%, right? So you really got, I think in this environment, it's a big stock pickers market. You really have to pay attention to valuation. And I think during this time where rates are elevated, I think the good businesses, the good SaaS companies, the good enterprise software companies are going to start to grow into their valuations. And then when, you know, maybe in 2 to 3 years, when the Federal Reserve starts to cut, I think those multiples are going to re-rate to the upside. So I think there's value there. I'd just be very, very careful with, you know, buying individual stocks in this market. But I don't know. I mean, what do you guys think? I mean, that's my take. But selfishly, I'm kind of more interested in what you guys, you know, think about this market environment. Hey, Bill is here. What's up? Let's see what Bill says. This is Lincoln Center, by the way. Absolutely beautiful. Keith is here. Welcome. Jay Sully, good to see you. Forest Management says we use Workday where I work. Yeah, most big companies do. Chances are, if you work at a major company, you probably use Workday for sure. Username Schmoosernames says Peter Schiff should do another Occupy Wall Street protest video. He should. Connor says, Tom, have you seen / heard about any of the protests? No, I have not. I don't want to talk about that, respectfully. I don't want to bring any attention to that. You know. Yeah. Michael Joseph says, sell in May, go away. Dan says, follow the yield. Agreed. All right, well, guys, we'll jump right into it. I think we're off to a good conversation. But tomorrow is Monday, okay? The weekend is officially over. Wall Street weekend is over. Tomorrow is May 8th. Can't believe it's already May 8th. We have a couple earnings reports coming out tomorrow. Most notably, in my eyes, is KKR. So KKR will be reporting earnings tomorrow, as well as Tyson Food. I think it'll be interesting to see how a lot of the supply chain mishaps and supply chain bottlenecks are going to affect Tyson's earnings report. Wow, look at this. Guys, isn't this absolutely gorgeous right here? This is why I love New York City. What you're looking at right now is Lincoln Center, and since it's the summer now, pretty much, it's the spring technically, they turned on the fountain at Lincoln Center. You can see these people at the bottom left enjoying the fountain. I'll try to get close to it so you guys could hear it. It's really, really nice. Now, if you guys want to visit here yourself, all you have to do is come to 66th Street and Broadway, Lincoln Center. Imagine having an apartment in one of these buildings. Your view is right here at Lincoln Center. Unbelievable. Hey, Austin City Limits, good to see you. I'll take you guys on a quick walking tour of Lincoln Center just so you guys can see it. Now, all the way to the back is actually the New York Public Library. So one of the main branches here. Now, the tax base in New York City has eroded materially. And the problem is we have a lot of bills to pay in New York City, right? We have the MTA, we have tons of critical infrastructure. So in order to save money, I think the mayor in New York, Mayor Eric Adams, is actually proposing a bill. I think it's a bill, or maybe it's just a piece of legislation where they are going to cut down on the hours of operation for libraries across the city. And I think that's a very poor mistake. I think that's a bad decision. Anyway, look at the inside of Lincoln Center. This is beautiful. While we're here, I'll get you guys an up-close and personal view of the inside. One of my favorite things about this, look at that staircase. Look at how gorgeous that staircase is. So this is where you enter when you go to the shows. And then here's your view. So imagine the viewers, everybody in the chat right now. You're walking outside of a show, and this is what you walk out to. It's amazing. And if you look all the way to the left, the upper left, you guys know what that is. This is Central Park Tower. That's how tall it is. You can see it all the way from up here. Amazing. Really quick, I wanted to mention, I think I already mentioned this, because Tuesday, Occidental Petroleum Group is reporting earnings. And the reason why I think that's so critical to pay attention to is because that is one of Warren Buffett's or Berkshire Hathaway's largest holdings. Now, if you haven't read the cover story of this weekend's Wall Street Journal, the exchange cover story, I would really, really suggest going to the Wall Street Journal's website, or maybe you just still have the paper in your driveway, you just forgot to pick it up. Pick it up tonight and read it before the open on Monday, or before your work week on Monday. There were two distinct articles about Warren Buffett specifically, his decision making, also Charlie Munger's decision making, and the story of why they decided to make a big purchase of Occidental Petroleum. I think it was like 13% of the company. Is a really, really good learning lesson. So if you haven't read that cover story, please check it out. Now, the CEO of Occidental Petroleum is very, very similar to Warren Buffett in that she has been aggressively paying down a lot of the debt. She's been streamlining the operational efficiencies of the company, and the company's been doing really well. It's been printing cash, but there's a lot of analysts on the street. This is the library, by the way. I'll just quickly show you guys. We'll do a quick pass through just so you can see it. Not a lot of people know that there's a library at Lincoln Center, but there is. Now, a lot of analysts on Wall Street are very perplexed by this investment, right? Why would Berkshire Hathaway and Warren Buffett be loading up and making such a big bet in the oil and gas industry when pretty much every single government across the globe, right, with a few exceptions, are deterring, or I should say discouraging investment, new investment in oil and gas? Now, when I think about this, it reminds me of the recent testimony, I think it was in front of the banking committee, where you had all of the Wall Street mega bank CEOs. So for example, you had Jamie Dimon of JP Morgan Chase, you had Brian Moynihan of Bank of America testifying before Congress, and Congresswoman, I think it's Rashid Tlaib, I believe, Congresswoman. Now, I don't agree with, we're pretty much polar opposites on the political spectrum. Well, that's okay. That's all right. Wow, hold on, hold that thought. Look at this, guys. This is the Juilliard Center. Look at these two people on the grass with the umbrella. That's like an awesome shot. It almost looks like we're on the set of a movie. I'm not sure how well that comes out on the stream, but in person, that looks really, really unique, really cool. Anyway, there was a really interesting question. Rashid Tlaib was asked that of Jamie Dimon. And she said something along the lines of, you know, we really want a commitment from JP Morgan Chase that there will be no more investment and no more lending to the oil and gas sector. Mr. Dimon, can you confirm today in front of Congress that you will agree to no more lending to the oil and gas sector? And Jamie Dimon got off mute, and he said, absolutely not, because that would be the road to hell for America. And she totally flipped out. However, I think Jamie Dimon was absolutely right. If you want to see that video, subscribe to this YouTube channel, Walks in Wall Street, and look at the main video I have on my cover story, whatever it's called. The main video that is like an introduction to Walks in Wall Street. You can watch the full testimony. But the point is, everybody, politicians not only in the United States, I don't want to make this seem like this is exclusive to the United States, because it's actually worse in other countries. There's this huge push to diversify away from oil and gas. So for Warren Buffett and Berkshire Hathaway to make such a big bet in Occidental Petroleum, it's kind of perplexing, but the bet has paid off thus far. Brendan O'Brien is here. What's up, Brendan? Happy Sunday to you. This is Jamie Dimon is 100% correct. It would drive the middle class into the Neolithic. You know, I do agree. And I think the political, real quick before I go off on a tangent, I just really quickly want to point this out over here. I actually went to college over here, the John Jay College of Criminal Justice, but right here is a very famous high school. It's called MLK High School, Martin Luther King High School, and they always have the best soccer team. I think they win the City Cup or whatever it's called every year. So MLK is right here. And then adjacent to MLK, this is actually Juilliard. This is one of the most prestigious music schools in the entire world. I was about to say the entire country, but no, the entire world. This is it, Juilliard, right here in New York. Amazing layout. I'm so glad I came here, because I never really get a chance to show you guys this part of Manhattan. But, you know, Brendan O'Brien, I think he's correct, right? And here's the thing. I truly believe that both Republicans and Democrats, conservatives and not conservatives, liberals, all agree that we want a greener future, right? We want to have a big push towards green energy, but the incentivization for politicians is only to get reelected. So in that hierarchy, in order to get reelected, right, the hierarchy of needs, you have to say these hyperbolic, ridiculous statements like, yep, no more lending to the oil and gas sector, no more production of oil and gas starting today. Like, and anybody with a brain or who has even a slightest bit of education knows that's just ridiculous. Like, that is just nonsense. But unfortunately, politicians have to pander to the base right? And unfortunately, many misinformed voters, don't really understand how the entire global economy is pretty much propped up on the back of the oil and gas sector, right? Now, over time, I think it's appropriate to wane ourselves off non-renewable energies such as oil and gas for sure. I mean, that's obvious, but it's going to take a decade or more, right? So I don't know, we'll keep our eye on that, but I just wanted to note that because Tuesday, May 9th, as we're crossing the bridge here, Occidental Petroleum will be reporting their quarterly earnings report, and I'm very interested to see what the CEO is going to say, because think about the year-over-year price change in crude oil. Now, this time last year, I should say March of 2022, crude oil hit a new all-time record high, I should say a 52-week high of $130 a barrel. I believe as of recording this video, I think we're at 73 bucks, something like that. Now, in the article, again, if you read that Wall Street Journal cover story, most of these oil companies could be very profitable so long as oil, I should say crude oil, stays within the range of around $76 to $96. They could still be very, very profitable in between those two ranges. However, in my view, and there was a really famous hedge fund manager that goes by the name of Dan Tapiero, and I'll catch up on some of the comments here in a minute. But Dan Tapiero, he actually used to work under Stanley Druckenmiller. And Stanley Druckenmiller is probably one of the greatest portfolio managers or traders of all time. He actually got his start working under George Soros back in the day. But anyway, he said, if you think about this big move in crude oil, right, all the way from $130 a barrel all the way down to the mid-70s where we're trading at now, that in and of itself is the market signaling recession. And I think I would agree. So we'll keep our eye out. Hey, Steph UH, good to see you. Says hybrids are a compromise. We get up to 54 miles per gallon today. Love that. Hey, the RT440 says the Republicans don't want to raise the debt ceiling to pay the bills that Trump created. They want to raise the retirement age and cut Social Security. This is the RT440. Now, here's the thing. It's all a political nonsense and charade all the time, and that is true. By the way, that is true. The Trump administration did spend a ton of money, so it's not only the Democrats who are the big money spenders. But here's the thing. In my view, as it relates to the market, right? As it relates to the market, there's been many analysts coming out and saying that there is big systemic risk and a possibility that the U.S. could default on its debt. I'm still in the ballpark that there's probably maybe a 4% probability that that's going to happen. I highly doubt it will. It's the same thing every time, right? It comes down to the wire. The Republicans start to talk bad about the Democrats start to hurl insult to the Republicans. You're holding us hostage. America's not a deadbeat. We need to pay our debt. And then it comes down to the wire. They compromise and they raise the debt ceiling. In my view, that's going to happen again, but we'll see. Carlos Ramos says, what are you walking on? This is a really unique sort of grass area here at Lincoln Center that has an amazing view of Billionaires Row. It's really cool. Usually it's closed, but tonight I thought it'd be kind of cool to walk on it. I don't know. Hey, Ryan Beck is here. What's up? Says evening all. Good to see you, Ryan. Thank you for joining us. Appreciate it. Brendan O'Brien says nuclear energy is the only solution. I agree. I think we should be embracing that. I think we should be embracing nuclear. It's the cleanest form of energy there is, for sure. Now, since we've been talking about interest rates a lot, right, for good reason, last week was Fed week. Then we had Christine Lagarde raising interest rates at the ECB. And next week, everybody, on Wednesday, we are going to hear from the Bank of England. Now, we've been talking about the futures market, again, at the very, very beginning of the live stream. And if you look at the futures market, they're actually pricing in rate cuts this year. So for those of you who are just joining, I'll sort of repeat what I said again because I want to ask you guys. Fed Chair Jerome Powell, not only at the FOMC meeting that we just had on Wednesday, but the meeting before that, he said specifically, directly, that there will be no rate cuts in 2023. And if the bond market is pricing in cuts, well, the bond market is wrong. So if the market is still pricing in cuts this year, even though the Fed chair specifically is telling everybody that there is going to be no cuts, well, what does that lead us to believe? Well, I'll give you my take. I gave you my take at the beginning of the stream, but I'll give you my take again for the people who are just joining. To me, that's signaling the market is pricing in some sort of a tail risk event, some sort of a black swan event. So here's what I mean by that. If the Fed chair says there's going to be no interest rate cuts in 2023, and the market is still pricing in that there is probably going to be rate cuts, that means the Fed, they're betting that the Fed is going to be forced to do emergency rate cuts due to some sort of systemic risk. Now, maybe this is, one of the big four banks failing in the United States. Maybe this could potentially be the US defaulting on its debt. I don't know. We can only speculate. But I want to ask the audience, because I'm more interested in what you guys think as we're looking at the Lincoln Center fountain. Do you guys think we're going to get rate cuts in 2023, or do you think that we are going to end 2023 with the Fed funds target range of 5% and above? What do you think? Hey Connor, what's up? This is Tom. Are you going downtown tonight? We are not. We are uptown tonight. Maybe tomorrow we'll go downtown. Brendan O'Brien says, what's scary is that Buffett and Munger signaled the American golden age is over. Yeah, a lot of big money managers are, right? Dalio is signaling that. He actually wrote an entire book about it, The Changing New World Order. It's starting to rain. Let me put my hood up. In New York, we've been having horrible weather, and we have one day of nice weather, and then it starts to rain again. Got the umbrella. LB says above. Ryan Beck says, I think there is a chance due to the black swan, likely bank related. Hey, Krog Dog says, everybody seriously just put your money in the S&P 500. It's like buying a lottery ticket is a winner. Yeah, pretty much. Now again, generally speaking, right, Krog Dog is correct. And I always revert back to the Peter Lynch quote, right? Peter Lynch says corporate profits in America generally go up about 8% a year. So on an annualized basis, corporate profits in America grow at 8%, which should mean the market ought to double every 15 to 20 years. So if your only bet is that you think corporate profits in America are going to continuously grow or continue to grow over the long term, well, then the vast majority of people are better off just dollar cost averaging into a low cost index fund that tracks the S&P 500. We could thank Jack Bogle for that, or John Bogle, who was the founder and CEO of Vanguard Group. He did pass away, unfortunately. Hey, Long Island Duck is here. Good to see you. Welcome. Beacon, New York. Russ Lauer says, I wonder why Elon Musk is pushing Bitcoin so much. I don't think he is. I've never heard Elon Musk push Bitcoin ever. Speaking of Elon Musk, I gotta recommend you guys read this week's cover story of Investors Business Daily. It was such an incredible read, and it was all about space travel. It was all about satellites, and it got me thinking, right? Even though we're in a crummy market right now, even though we're in a little bit of an economic downturn with so many people getting laid off, I think we're actually going to get
unemployment claims at the end of the week. That's another thing we have to look forward to on Friday. I think we are going to get jobless claims on Friday. But even though we're going through a little bit of an economic decline, right? Because it's just normal business cycle activity. We're just going through a full cycle. There's still entrepreneurs out there and amazing innovation that is going on every day. And it's not going to stop just because, rates are at 5%. If anything, it's going to continue to accelerate at a blistering pace that we probably can't even control. So the cover story of Investors Business Daily today was all about how Elon Musk is investing billions and billions of dollars into Starlink. Amazon now has a competing company to Starlink, where they're going to be sending low orbit satellites into space to provide extremely fast and efficient internet to everybody. And that's huge, right? That is really huge, these low orbit satellites. And I think the statistic, I'm trying to remember off the top of my head, because I read the article earlier this morning, I believe between the US, Canada, and China, and Russia, so between those four, by the end of 2027, there's going to be 37,000 brand new low orbit satellites that are going to be shot into space in order to provide internet connectivity. That's huge. I mean, that is really the future, right? So if you want to think about a low latency, high throughput application and all of the different incredible things that you could be doing with that, right now a lot of the telecommunications companies like T-Mobile, Verizon, the big players, AT&T, they're really pushing 5G, but we really don't technically have 5G right now. We do, but it's not like true pure play 5G. You may be able to get 5G speeds in one specific area, right, if you're standing right outside the tower, but generally speaking, you won't be able to get those speeds anywhere else. And here's the big thing. As we talk about all of the major technologies that are going to be driving the economic growth of the 21st century, what's ever left of it, it's going to be autonomous driving. It's going to be AI, it's going to be machine learning. And guess what? In order to have these things, you're going to need networks that are extremely capable of low latency, high throughput. And I think that's what we're going to get with these low orbit satellites. So check out that Investors Business Daily article. It was unbelievable. And Amazon, I think, is going to be a big leader in that too. Hey, Two Wheel Freedom, what's up? Good to see you. Kenneth says, no, it's not. Sorry, Tom. You don't have to apologize. Joseph says, the delay is the problem. Those new satellites links allow transmission almost zero latency. Well, I think those are the very high orbit satellites, right? I forget the acronym, what they were called. The low orbit satellites, I think, can provide that low latency. All right, so we are now walking down Broadway back to Columbus Circle. Let's go 2 more blocks down Broadway, and then we'll make a left on 57th Street. You can see everybody's busting out the umbrellas. It's starting to rain. Although, thank God the wind isn't picking up yet. I'll give you one more shot of Billionaires Row in the Rain right here. Hey, Golden City says, hey Tom, what's up? Do you watch Kitco News? They were talking about this headline. Traders pair bets on Fed rate cut after strong jobs report. I don't know what that particular news, is that like an online news company? I'm not familiar with it. Personally not familiar with it. But if you're talking about the jobs report that we just got on Friday, I don't think anybody can deny the fact that it was a very strong number. However, not to be a party pooper, I think we do have to dig a little bit deeper into the data. And, I think it was Michael Joseph may have tweeted at me, and he's absolutely right. I think it was Michael Joseph. If it wasn't, if it was somebody else, I'm sorry. But anyway, you know, a lot of these jobs numbers have been getting revised down quite substantially. I think the previous two jobs numbers were revised down by 45,000 and 56,000 jobs respectively. And here's the problem. If you think about I think this guy's trying to catch a cab. If you think about the jobless claims number that we're about to get out, I think it's Friday we're getting out jobless claims. That's supposed to come in really, really hot. And on a lot of the headlines that we've been getting, and we've been talking about it right here on the live stream, big tech has been going through massive rounds of layoffs. And just recently, Morgan Stanley announced that they are going to be laying off 3,000 people. This was breaking news on Friday evening. And this is due to a deal drought, right? So if you think about a pure play investment bank, you know, one of the main ways an investment bank makes money is from fee income, right? Fee income. So if there's no deals to be had, if there's no M&A activity, M&A means merger and acquisition activity, if there's no companies that are going public via IPO, well, then there's no need to underwrite these deals, and thus there's no billings, and thus there's no fees to be generated. So if you think about all of the employees that these Wall Street mega banks had to bring on during the pandemic and in 2021, when deals were so crazy. I mean, I have a good friend who works at Goldman Sachs. He's an investment banker. And I remember in 2021, he was like literally on the verge of a panic attack because he physically was not sleeping because the deal flow was so crazy. He was on, you know, multiple deals at the same time. He was traveling all over the place. And that's mainly because of the massive amount of economic, I should say fiscal and monetary stimulus that was pumped into the economy. 2021 was a record year for a lot of initial public offerings, as well as a lot of these scammy SPACs, the special purpose acquisition companies. And now that interest rates are going back up, all of that deal activity in that spigot is totally shut off. Hey, Loose72 is here. What's up? Hey, Walks on Wall Street. Good to see you, Loose72. Always a pleasure. Thanks for joining us tonight here in Manhattan on this very rainy night. Golden City says, what employment rate? Hold on, let me read your comment. It says, what unemployment rate they want to achieve? 5%? Yeah, I mean, well, that's another thing, right? So Golden City makes a good point. You know, as we're talking about interest rates, does anybody remember the very notable interview with the New York Fed president, John Williams? So John Williams is the New York Fed president. And just 2 months ago, he came out and said that they are shooting for a 5% unemployment rate in the United States in order to even start to think about cutting rates. Now, guess what? Last week, we got that gangbusters jobs report, and the unemployment rate actually went down. I think the unemployment rate in the United States right now, guys, is at its lowest point since, what, 1967, 1960 something? I think it's at 3.4%. The path where I want people to do bad. I want people to do good. But I think also those numbers are a little bit misleading too. I think it's more appropriate to focus in on the labor force participation rate. Now, I'm not going to give you guys the answer. I'm going to give you the tools. Go and look at the labor force participation rate and its most recent movement, and then compare that to the unemployment rate, and you'll start to see something interesting at play. Hey, Travis Williams, or William Travis, what's up? Good to see you. Guys, we're on 57th Street. The building all the way in the back is 432 Park Avenue, and we are actually standing right outside of the main entrance to Central Park Tower, the Extel group, Central Park Tower. Tony says, greed, greed, greed. What's up, Tony? Good to see you. Hey, Two Wheel Freedom, welcome. The Wounded Avatars, his thoughts on the Safe Banking Act passing and being signed into law. There is an expedited Senate committee meeting this week. It should open the door for millions of new cash deposited if passed. I don't know. I really don't have any thoughts on it. And if anybody does have any thoughts on it, or who could explain, maybe some of the intricacies of the bill, please feel free to do that. I do not have any thoughts on it. Tucson says, I was just a kid in 1967, but things were great back then if you weren't going to Vietnam. That's true. Hey, Lewis is here, says, hey, what's up, Lewis? Good to see you. Kingston says, I want to wear... All right, cool. Hey, Mr. Cold is here. Let me read some more comments. Neil says, hello from the UK. Hey, Neil, good to see you. I think you guys have a new king over there. Daryl, welcome. This is good evening, Tom from Chicago. Russ Lowers says, it just seems like there is something major wrong in the background of this country. Yeah, I mean, I guess more specifically, are you referring to what, the financial sector, or just the country in general? Now, I was reading Barron's today, and you know what got me so upset? And I think every single American should be absolutely outraged by this. Now, it doesn't really have to do with finance, and it doesn't really have to do with the economy, but I would actually argue it does. And here's what I mean. So here's a statistic from Barron's. In 2021, in the United States of America, there were 80,000 deaths due to fentanyl. To me, that's absolutely unacceptable, and that's actually, in my view, if I was president of the United States, I would take that as an act of war on our country. That is just totally, totally unacceptable. 80,000 deaths due to fentanyl in 2021. I think it was 100% year-over-year increase from 2020. And if we continue to go down that path where we, maybe next year we have 200,000 deaths from fentanyl, that is going to impact the economy in a big way, in a very, very big way. And the big problem is, the reason why the United States is such an amazing country, and I still think it is an amazing country, it's the greatest country on earth, but the main reason, right, the number one reason why it's so great is because we have class mobility here. That's why people come to America. They come to America for class mobility. You can come to the United States of America with literally nothing, with just the shirt on your back, and you can make a great success. And all of the fentanyl deaths are happening disproportionately in low income and minority communities. So that in and of itself is hindering and making it harder for class mobility. And I think that's unacceptable. I think that's a total failure of government. And I think our politicians, both Democrats and Republicans, should be ashamed of themselves for letting all of this heroin cross through our southern border. I think it's absolutely unacceptable. When I read the number, I almost had to do a double take. I thought it was a misprint. I actually thought they misprinted it. But it's true. 80,000 people, Americans, right? Our brothers and sisters here in America. 80,000 died last year from fentanyl. I think that's absolutely unacceptable. I think the country should be outraged. But, we'll see. We'll see what changes. Anyway, not to rant, I just thought it was important because that's just unacceptable to me. But guys, here we are on New York City's Billionaires Row. Check this out. The building we're looking at right now is the Steinway Tower, one of my favorite buildings in all of Billionaires Row. And I think another super tall is actually going up right here. We're actually going to be able to see it go under construction. You have the crane right here. And then you have the front of 157. Kevin Ramsey says, I agree. Harry Toast says, I agree, Tom. It's totally unacceptable. It's just nuts. It's nuts. I mean, guys, think about 80,000 people. I mean, to put it in perspective, next time you're walking down the street, right? Let's say you're walking down the sidewalk. Physically count the amount of people who are walking by you. I challenge you to do that. Like, if you see a person walking by, count them. 1, 2, 3, 4, 5, 6, 7. When you get to counting 50 people and you visualize 50 people, that's a lot of people. Like, you may think, oh, 50 people, you know, walked past me, or I'm doing a presentation today in front of 50 people. It may not seem like a lot, but when you're in front of that audience, right, presenting or doing a public speech or a keynote in front of 50 people, that's a lot of people. So imagine 80,000 of those piled up. That's just, I mean, to me, if I was president, I mean, I would consider that an act of war on the country, right? We have foreign actors and foreign entities and cartels smuggling these very highly addictive drugs into the United States for no other reason but to profit off the death of American citizens. I mean, is that not what it is? That's what it is to me. Anyway, all right, new topic. I just thought it was appropriate to say that because I think if this continues at this rate, that is going to impact immigration in the United States. That is going to impact property values, right? You don't think that if one neighborhood gets totally overrun with fentanyl and everybody turns into zombie land, you don't think that's going to impact real estate values? You don't think that's going to impact unemployment in those communities? That could be huge. You know, look what's going on in San Francisco. I mean, we were talking about commercial real estate, were we not? We were talking about how Class B and Class C property and commercial real estate is going to get bombed, right? Specifically in those big cities like San Francisco where you have such a big drug crisis. It's not as bad here in New York City, but it definitely could get as bad if, you know, if this continues. Anyway, let's head all the way over to 5th Avenue. Hey, Tariq Khan is here, Dusty Cole, good to see you, Dusty. Welcome. Yeah, Williams is drugs driving up homelessness. That is another major problem for sure. All right, I want to give you guys one more shot, one more quick peek of the super tall buildings on Billionaires Row. And then I'll show you guys the brand new Tiffany flagship store that just opened. And then we'll get on to our major topic for tonight's live stream. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams about 7 days a week between New York City and Miami, talking about the financial markets. But I think the biggest topic for tonight, which we are going to get to right now, this is the most important major event coming up on Wall Street this week, in my opinion. Right? Also, we have the Bank of England. Right? They are going to announce their monetary policy decision, but we are also going to get the big bad inflation number. That is right, the CPI report will be coming out on Wednesday, May 10th. The Bureau of Labor Statistics will be releasing the Consumer Price Index for April. Now, many economists on Wall Street are forecasting a 5% year-over-year increase in inflation. Now, if you look at the core number, I should say the core CPI, for those of you who don't know, core CPI is excluding volatile food and energy. They think it's expected to rise 5.4%. So as we do every month, it's almost a tradition now on Walks on Wall Street, I want to turn to the chat. I want to turn to the team. Do you guys think the inflation number is going to come in above economists' expectations, right at 5%? Do you think it's going to come in hot? Do you guys think CPI is going to come in hot? Or do you think it's actually going to undershoot economists' expectations? Let me know in the chat. What do you think? You think it's going to come in at 5.2, 5%. And I'll sort of explain why I like to run these polls here in a minute. Who Dat Dave says I think it's going to come in below. Jeff W277 says inflation's going to come in below expectations. Okay, so we have quite a few people thinking it's going to come in below, which is interesting. Hey, Gary Carpenter, good to see you. Welcome. Penelope. We're coming up on the Hilton flagship. Brian says, I think we're going to come in above at 5.7. Austin city limits is below. Steph UH says yes. Lewis says inflation in Brazil is between 13% now. It's horrible. I couldn't believe that. You know, the UK inflation is 10%. That's unacceptable. They're going to have to do something about that. Justin S. is at the expected rate. Ryan Beck says, I think inflation is going to come in line or higher. Golden City says below, oil is down. That's true. That's actually a really good point. Bill says below. So pretty much everybody thinks it's going to come in below or at expectations, except Rich. Rich in the chat thinks it's going to come in hot. I guess we'll see. Hey, Ibrahim Azam says Manhattan looks awesome tonight. Ibrahim, good to see you as always. Ibrahim is joining us from California. Tucson says inflation is still high. I would like to know where economists buy their gas and groceries. Yeah. I mean, you're right, Tucson. I ran a poll on Twitter. You know, if you guys want to connect with us off the live stream, if you follow us on Twitter at Walks Wall Street, we're always conversing there almost every day. I ran a poll on Twitter asking, you know, is your grocery bill, if you compare it to year over year, is it the same as last year? Is it higher than last year? Or is it lower than last year? 97% of respondents of the poll said it's higher. Now team, real quick, this is going to tie in very nicely to the live stream. We are now on New York City's Fifth Avenue. This is one of the most exclusive streets in all of New York City. We are standing on the corner of West 57th Street and Fifth Avenue. Right across the street, you have the very famous Louis Vuitton building, right, which is owned by LVMH. And right here, you have the brand new Tiffany flagship location that just finished construction. Look at how amazing this building is. Now, I want you to direct your attention all the way to the top. You guys see that? It almost looks like a big blue box all the way at the top. I believe that's actually a restaurant. So all the way at the top of Tiffany's, you could have breakfast at Tiffany, overlooking Fifth Avenue and overlooking Central Park. It's a really unbelievable piece of real estate. Tiffany & Co. was actually acquired by LVMH when the company wasn't doing so hot. But the CEO of LVMH, which just so happens to be the richest man on earth, totally transformed the company and brought it back. And Tiffany, I think, recorded their highest sales quarter ever in history. Let me try to cross the street so I can give you guys an up close and personal view. But New York City was busy earlier in the week because this flagship location just opened. They had the grand opening. I'll show you guys the windows of Tiffany right here. You can see some of the jewelry on display. Hey, photos from around New York. What's up? Good to see you. You can see they're just doing the finishing touches on the construction here. So photos from around New York says, yeah, Bergdorf Goodman also has a restaurant in it. That is the major store right across the street, right here. Since we're here, let's take a look at all the windows. And again, guys, this is brand new. This just opened this week, so this is totally brand new. You guys are some of the first people in the world to see this building. Hey, LB, this is nothing coming down in price where I live and groceries are higher. LB, I would agree with you. It's the same thing in New York, my friend. It is ridiculously expensive as always. Hey, Mark is here. Says hello. Good to see you, Mark. Welcome. Puzzle Observer says, keep it down a little bit, please. My grandkids are sleeping. Love your live streams. Thank you. I mean, you could turn your volume down. Telling a New Yorker to keep it down is like, you know, telling a fish it can't swim. It's not going to work out very well. Look at this. This is really, really beautiful right here. So this is actually the front of Tiffany's right here, with all diamonds bursting out the front door. Really cool. Hey, Carol H is here. What's up? Good to see you, Carol. Carol, we were just talking about LVMH, record earnings, record sales, and LVMH acquired Tiffany, and they completely remodeled the entire Fifth Avenue flagship location, and it just opened. It's unbelievable. Now, I know I've been showcasing this building a lot, but I want to cross the street just so you guys may be able to see inside the windows a little bit of the restaurant. Hey, Troy Atman, good to see you. So we're now crossing northbound. One of the things I love about New York, right after it rains, is the sidewalks. It's almost like looking at Christmas lights on the sidewalks, isn't it? All of the light reflecting off the concrete. It's really stunning. But check this out. I think this is a little bit better view. You can see all the way at the top floor of Tiffany. It's almost as if it's a building within a building here. Very cool. All right, now let's head downtown, show you guys the Empire State Building. Ryan Bexu, it is partly retail and then their HQ. Yes, that is correct. You know, I'm not sure what time it closes, but maybe if it closes at 9 p.m., I'll start the live stream live from 57th Street, and maybe we could do a walking tour inside the building. I think that would be really cool for you guys to see inside. I think we got to cross the street, maybe? And we'll see if we could snake through. Go around? Okay, come. Oh, thank you. He gave us the go-ahead. Thank you, sir. Now, here's it. You guys want to hear an interesting thing about Trump Tower? So, before Trump bought the space, like the plot of land to build Trump Tower, he was going to all of the neighboring buildings here and accumulating the air rights to the building. Because in New York, in order to build as high as you want, you have to actually accumulate the air rights. And I believe he went to the Louis Vuitton store where we were just at right there, and he purchased some of the air rights there. And I believe the GM building, which is 2 blocks away from here, is just about, I forget the exact amount of feet taller than Trump Tower. But legend has it that Donald Trump has always been absolutely furious that he couldn't accumulate enough air rights to edge out the extra feet, centimeters, whatever you want to call it, to be taller than the GM building. But the city didn't allow it, right? Because couldn't accumulate enough air rights. So the Trump Tower is actually just a tad shorter than the GM building. I always thought that was kind of funny. So we're taking a walk down Fifth Avenue. I want to show you guys a very famous church. It's called St. Thomas Church. But before we do that, this is East 55th Street. As we've been talking about the luxury market, this is the St. Regis Hotel. It's one of the most luxurious and exclusive hotels in all of New York City, not to be one-upped by that of the Peninsula Hotel, which is actually right across the street. So you have two 5-star hotels in Manhattan right across the street. Just absolutely gorgeous pieces of property here. Again, these hotels can go for up, I mean, I think the floor is maybe $900 a night and up. Anybody in the chat ever stay at the St. Regis or stay at the Peninsula? Unbelievable buildings. Hey, Bill's like the St. Regis is stunning. It's a really amazing place. Now, during the holidays, we were actually lucky enough to go inside the Peninsula's lobby. If you really want to see a luxurious, gorgeous Art Deco style lobby, next time you're in New York City, if you're, maybe you're working in the area, or maybe you're visiting with your family, you could walk in the lobby, take a little bit of a walking tour yourself, and I promise you, you won't be disappointed. It is unbelievable. Ah, Carol H, as my dad did. It's a lovely hotel. It's really stunning for sure. If I stand back a little bit, you guys will be able to see the architecture, and you could actually, if you peek into the sort of the crescent windows here, you'll be able to see the restaurant of the Peninsula. Wow, look at this shot. You have the American flag, and in the background you have the very top of the Peninsula. And look at this. You have the Steinway building, 111 West 57th Street, Billionaires Row right here. Hey, Haas Manning, what's up, man? Good to see you. This is Tom. The Peninsula's lobby is fantastic during Christmas time. With carolers and all. Yeah, hot. That's when we went in. Now, they really don't like filming, but we had X'd one of the doormen there. He was a really nice guy. He let us do a quick walk around the lobby. It's unbelievably beautiful in there. This is Carlton Fine Arts right here. I'll give you guys a quick peek at some of the artwork here on Fifth Avenue. Hey, Techno Pink is here. Good to see you. And this is the University Place. This is a very exclusive club. The inside of this building is also amazing. Hey, NBA Elias, is Tom, what do these hotels cater to? Business and whatnot? Yeah, I mean, well, the 5-star upper end hotels, I would say the Peninsula, St. Regis, I would say the St. Regis is more a business environment in my view. And the reason why I say that is because they always have major real estate events there. I was invited to one not too long ago. I couldn't make it. I think I was actually in Miami at the time. One of the hotels that I think is very business forward, I should say. Every time I'm there, there's always a lot of business men, business women, is the Park Hyatt. And the Park Hyatt is right in 157, which is actually the first building that was ever built on Billionaires Row. It was finished in 2014. And at the time, in 2014, Bill Ackman, who is a very famous hedge fund manager we all know of, right? Him and Pershing Square. Oh man. She was shooting heroin right in there. Oof. him and Pershing Square actually bought, I think, the 75th and the 76th floor of 157 for just a tad under $100 million. I'm not sure if he's ever sold it, but at the time, Bill Ackman thought that he could easily flip it for a double within 5 years. I don't think that's true, but you know, at the time, you guys have to understand, there was really only one mega tall, ultra luxurious apartment building in New York. Now, there was many other luxury apartment buildings in New York, obviously, right? But I'm talking about Billionaires Row-esque style apartments, right? Like 157. But then guess what happened, right? Basic market mechanics of supply and demand. Right after 157 went up, then you had 432 Park Avenue. Then you had Central Park Tower, 220 Central Park South, 53 West 53rd Street, Steinway Building. You had all of this new inventory coming on the market in the ultra luxury space, servicing the ultra high net worth individuals, and it's not as unique anymore. I mean, it's still unique. It's still an unbelievable building, an unbelievable apartment. It's actually it's my personal favorite building on Billionaires Row, 157. But again, basic laws of supply and demand. If you're a billionaire and you see 157, but then you see Central Park Tower going up, and you look at Ryan Serhant of Serhant, his brokerage, and you're like, wow, I want to own that trophy apartment in the sky, a beautiful triplex on the market for $250 million in a brand new building, right? When you get up to that level, high net worth, ultra high net worth, it's not necessarily like buying an apartment, guys. These are buying one of one, ultra unique, literally Picasso's or Mona Lisa's in the sky. It's an original, right? You own a work of art in the sky. That is the mindset, right? So it's a little different. So we'll see how Bill Ackman handles that piece of property. Now, another notable resident of 157 is Michael Dell. I think he still owns that property. Speaking of luxury things, this is Cartier. Now again, I know I've been rambling on, but I gave you 3 recommendations in this live stream. Number 1, you got to read the cover story of Investors Business Daily talking about satellites. We sort of talked about that with internet connectivity. Number 2, you got to read the cover story of this week's Wall Street Journal as they were covering the Berkshire Hathaway conference and how Warren Buffett makes decisions in investing in companies. But the third one is you got to go back 2 weeks and read the cover story of last week's Wall Street Journal, where they interviewed the CEO of LVMH, Moët Hennessy. And rumor has it that the CEO of LVMH is trying to make a very big bid, a big tender offer for Cartier right here. However, the article says that Cartier is not for sale, but the question was, if you could buy another luxury brand, any luxury brand it is, what luxury brand would you acquire next? And the first word out of his mouth, the CEO of LVMH, richest man on earth, he's like, was Cartier. But unfortunately, it's not for sale. So maybe this time next year and a couple of years from now, there'll be breaking news in Bloomberg, the Wall Street Journal, CNN Business, Fox Business, that LVMH has acquired Cartier. Who knows? Who knows? Amazing building, by the way. East 52nd Street and 5th Avenue. Jumbo Jet, good to see you. We have a lot of spam tonight. Hey, Sunshine After Rain, good to see you. Welcome. All right, let's continue to walk down because we're almost at time. The building right next to Cartier is the Versace building, but unfortunately they closed down. Right? You could imagine how expensive this premier real estate is on 5th Avenue. I do not think they could make the rent, so they did decide to close down. So the Versace store is no more here on 5th Avenue, unfortunately. Guys, please keep all race comments out of the chat, please. I think we're getting attacked by a troll farm. Lewis says, Tom, do you stream every night? We do. We do stream every night. So we start the live streams at 8:30 p.m. And we usually go for 2 hours. I'm trying to think if there's anything else I wanted to cover for you guys. Oh yeah, we got to talk about China for a moment, because a major Chinese company is reporting, and I think that's going to give us a pretty good indicator of Chinese economic growth, right? Because we just had the zero COVID policy. Whoa, that bus. I'm not sure if you guys saw that, but that bus literally did a fishtail. That was insane. Anyway, so zero COVID policy is over, thank God. But we haven't really seen much of the consumer spending coming out of China that we would have wanted. So next week on Thursday, we are going to have JD.com, which is a major Chinese company, reporting earnings. So hopefully that'll give us some interesting insights into the health of the Chinese consumer and give us some perspective of if consumer spending is picking up or not. Now, we got some preliminary data out of the earnings report from Apple. CEO Tim Cook said spending out of the Chinese market was a little bit lackluster. It came in well below analysts' expectations for consumer spending there. You would think that, you know, with the country opening up, emerging out of the pandemic, there would be more business activity, you would think. Unfortunately not. Hey, Fun Feeds, good to see you. Susan Schaefer, welcome. Look at this atrium here. And here is St. Patrick's Cathedral. Hey, E. Monica B says, hey Tom, good to see you, E. Monica B. Susan says Apple is the first $1 trillion company. Indeed. I mean, Apple's really one of 5 companies that's really carrying the market. You know, even though Apple did beat analyst expectations, beating both on the top and the bottom line, revenues were down year over year, but that's to be expected. And we talked about this too, right? Because think about consumer electronic spending. This is the St. Patrick's Cathedral gift shop, by the way. Now, think about consumer electronic spending after the pandemic. Well, I should say during the pandemic. It absolutely ballooned. Well, why? Well, I was involved in this business. This was in my previous company. We did a ton of public sector deals. And there was massive amounts of grants, massive amounts of stimulus that were going to state and local governments and public schools in order to bridge the digital divide, right? So when the government shut us down and forced kids to stay home from school, this created a major problem in the United States because the rich kids and the kids in the middle class were fine because they could just, you know, go home and log on to mom and dad's internet. But I think people don't understand that there's actually a good percentage of children in the United States that do not have access to reliable internet at home. So there was a big problem that we needed to solve, a huge problem, and that is making sure that lower income children, or children from lower income families, don't fall behind. So there was massive amounts of government spending on hotspots, on connected Chromebooks, on connected laptops, connected smartphones and iPads. And I actually was involved in some of those deals. And we were taking orders of literally, I think the largest deal we did at the time was for 40,000 Chromebooks with LTE connection via a SIM card. So you had about 3 years, if you look at all the major consulting firms like Accenture, they estimate that there was about 3 years of technology spend that was a pull forward, right? So the industry term for spending that should have been done over the course of 3 years that all went into, a couple months, it's called pull forward. So it's only obvious that you would have PC sales, Mac sales, smartphone sales, tablet sales down significantly on a year-over-year basis. I think the last piece of data that we got, I really quickly want to show you guys this hotel over here. This is the New York Palace. The last piece of data that we got is that connected laptop sales on a year-over-year basis is down 34%, which makes sense, right? If you go to a school district, let's say if you're a public sector account executive somewhere, at Dell or HP, Lenovo, and you go to a principal of a major school district, and you say, "Hey, you ready to place an order?" They're going to be like, "No, we placed an order in 2020, and we have all of the information technology that we need. Maybe check back with us in 2 or 3 years." Anyway, so you had a little bit of pull forward there. Ryan Beck says it was infrastructure first, now it's affordability and literacy. Agreed. Now check this out. This is the New York Palace. This is another luxurious 5-star hotel in New York City, very close to Park Avenue, by the way. MBA Elias says, I like what Warren Buffett said about Taiwan Semi despite slow PC sales. MBA Elias, what was his comments on that? I didn't get to see. I'd be interested to what he said. What was his comments on that? Steve CR says, let's say I'm an accounting executive. All right. Justin S says, well, now that wouldn't be their update cycle if it's been 3 years since the initial investment. Well, you have to account for breakage and slippage, right? Think about if you're giving a laptop or a Chromebook to a middle schooler or a high schooler, that thing is probably going to go through some beating. So, I used to account for 10% of the purchase to be either lost, damaged, or stolen within the 12-month period. And those were actually appropriate numbers. Hey, Raul is here. Says, good evening, everybody from Colombia. Good to see you. Excuse me. I think what we're going to do is we're going to head down to Grand Central Station. We're walking down Madison Avenue now. Ryan Beck says he said they were one of the best run companies. I would agree. Taiwan Semi, TSM is a very well run company. MBA Elias says, Tommy said Taiwan Semi is one of the best managed companies and most important in the world. I would agree, right? MBA Elias, look at this shot, standing in the middle of Madison Avenue. Very cool. I mean, think about it like this. All of the new innovations that are currently in development, and pretty much anything of importance right now, is made with semiconductors. So chips right now is sort of the liquid gold of the past. Excuse me, I'm referring to oil. So whoever controls the semiconductor production, the manufacturing, and the semiconductor design is going to win out, in my view. Guys, check this out. So we are on the corner of East 48th Street and Madison Avenue. What you're looking at right now is 270 Park Avenue. Now, this building is going to be the brand new JP Morgan Chase headquarters. So, in big news, JP Morgan Chase just took over First Republic Bank. And this is going to be Jamie Dimon's brand new office tower right here on Park Avenue. Now, I would consider this to be a Class A piece of commercial real estate. And if you remember from last night's live stream, we did a deep dive into New York City commercial real estate and commercial real estate in general. And it's going to be in trouble. However, you're going to have a huge migration to prime Class A commercial real estate, like the building that you have here. And a lot of the other Class B and Class C commercial real estate is going to get hit pretty hard. Now, on Bloomberg this morning, I was watching Bloomberg, Steve Ross. Anybody familiar with the late great Steve Ross? Excuse me. He was the gentleman who developed the Hudson Yards that we toured yesterday. And what Steve Ross said on Bloomberg this morning is exactly what we've been pounding the table about, I don't know, for the last 2-3 months. And it's that you're going to have this huge flight to quality in Class A commercial real estate, and everything else is going to get impacted significantly. Hold on one second. All right, sorry about that. But I believe Steve Ross is also making a very big bet on Miami. And he is the one who is developing One Brickell City Center. And in the interview, I'm not sure if you guys could find it. You could try to Google the interview. But in the interview, he was talking about the mass migration down to southern Florida. And if that mass migration is going to be sustainable, there's going to need to be a lot more inventory of very high quality Class A office space in Miami, right? Because if you're going to have companies and real companies like big tech companies, finance companies, actually decide to set up shop in southern Florida, they're going to need to be that inventory of Class A prime real estate for them to move into, right? So I'm extremely excited about One Brickell City Center. We're actually going to be in Miami live on Tuesday night. So maybe we will do a brief live stream around the construction site of One Brickell City Center. And it's supposed to look very similar to the Hudson Yards. It is raining, so we got to put the umbrella up again. I think the Roosevelt Hotel, unfortunately, everybody, is closed due to the pandemic. Hey, Melissa 2087 is here. Good to see you, Melissa. Thank you so much. Hey, Zozo Bob, what's up? I did hear about that. Michael Joseph says Diamond should shorten the total floors if they will fill 100% of the space. Interesting. Yeah, Bill, I agree. Hey, Vinny, look who's here. The one, the only Vinny Castellano. Long time no see. Vinny, how is everything with the move? And I also trust that Maria is doing well. It's good to see you. Happy Sunday. All right, this is now East 46th Street, and I'm going to take you guys on a brief tour of Grand Central Madison, which is the brand new Long Island Railroad entrance. We haven't been there in a while. Hey, CeeLo is here. What's up, CeeLo? Good to see you. Thanks so much. Thank you so much for joining us tonight. Patrick, New York, good to see you. Our great moderator, Patrick, thank you for joining. Hold on, just trying to get out of the rain. All right, let's do this. Let's make a shortcut, just so I don't have to walk too much in the rain. Hey, Armored Knight, good to see you. Golden City says, what do they say? Data is the new oil. Yeah, you know who I think originally coined that terminology? Is anybody familiar? Is anybody familiar with the company called Box? Ticker symbol BOX. It's another enterprise software company. Now, the CEO of Box is Aaron Levie. Aaron Levie is a very good CEO. I actually interviewed for a position in the company. I didn't get the job. Let me just wipe my feet. All right, guys, welcome to 200 Park Avenue. This is actually one of the entrances to Grand Central. You could get to Grand Central just by walking down this corridor here. And you also have an entrance to One Vanderbilt and Vanderbilt Avenue to the right. Yeah, he was. Bill, Aaron Levie was a really good Twitter follow back in the day. He still is. You know, I like Aaron Levie, but, you know, here's what would be my critique. I don't think he's aggressive enough. He tried to go the route of Michael Cannon-Brookes, which I understand. He tried to go the Twilio route as well. And for those of you who don't know what I'm talking about, is Michael Cannon-Brookes is the CEO of Atlassian, right? He's also the co-founder of Atlassian, which is an Australian enterprise software company. Hold on. Hey, Steve, says greetings from Tampa, Florida. Good to see you. Now, here's the thing. They were very against hiring a pure play sales force, right? So they were very against hiring like account executives, enterprise account executives, account managers. Their position was the new way of sales is just going to be an open marketplace where people just come and buy the product. Now, even though I do technically agree with that, it's very different when you're selling enterprise software, especially a big enterprise software platform like Box. Right, I'm not sure if you guys are familiar with the software. So revenue growth has been very lackluster at Box, and I think that's why the stock price has literally gone sideways since its IPO. Now, is anybody familiar with Chamath Palihapitiya? Anybody? Real quick. While we're talking about enterprise software, I want to give you guys an unbelievable view of Grand Central Terminal. Now, in 2014, I think Chamath Palihapitiya did, I believe it was a TEDx talk. I think it was a TEDx. And he said his number one stock pick for his fund is going to be Box. And he made a very compelling argument, right? You know, data is going to be the new liquid gold, right? Aaron Levie and Chamath really coined that phrase, and I think they're right. But the stock really never took off at all. And I think it's because they didn't really hire a pure play sales force. But I believe a hedge fund based out of New York, an activist investor, actually bought a majority stake in the company. And now, you know, Box is getting very, very aggressive with sales, you know, hiring mid-market account executives, hiring account executives. So hopefully, you know, they'll return value for shareholders. All right. I'm just shaking out my umbrella here. Just give me a minute.
got lost in the station. That's funny. A day's work is here, so that's how a day's work. Hopefully you're ready for this insane week we have ahead on Wall Street. You're getting the CPI numbers out. So hopefully you're ready for the inflation data.
Must be attended at all times. Any items left unattended will be removed by and subject to search by the MTA police. Thank you for your cooperation.
Yeah, there's bad. The microphone fell off. Hold on. Sorry, sorry about that. I completely didn't even notice the microphone was off. Let's see if the internet will work if I take you guys onto the tracks. I don't think I've ever taken you on the tracks before. This is track 32. Now, obviously, this only goes to the Metro North. However, if you go underground, that is how you get to the Long Island Railroad. But this section over here is for the Metro North. You can see here the sign to Grand Central Madison, the Long Island Railroad. Brand new, just opened. I'll take you guys down there since we're coming up on the end of the live stream. I think we have to go to the back. Yeah, we have to go around and then we'll be able to get down. So this is the food court down here, but it is very late at night, so everything is closed for the night. All right, here we have a Grand Central Madison concourse.
Broadway, Auburndale, Bayside, Douglaston, Little Neck, Gray Neck, Manhasset, Flandome, and Port Washington, now boarding on track 302. Customers exiting at Murray Hill must board the last 4 cars of the train on track 302. Attention customers, eastbound main line trains are bypassing Woodside until 5 a.m. Monday due to track work. For service to Woodside, take the Port Washington train that's now boarding on track 302. Plan your trip with our Train Time app or visit mta.info.
That's kind of cool. You guys could have a live look of what it's like to hear the train announcements. Travel News, this is you headed home now. Yes, we are headed home. I just wanted to show the viewers. We haven't been here in a while, and we do have a lot of new people that have been subscribing to the channel, so I appreciate that. So I thought I'd show you guys the brand new Grand Central Madison. So for a long time, Grand Central Station was only exclusive to the Metro North. But now, for those of us Long Islanders, you'll be able to take the train out to the island, to Nassau and Suffolk County, which is very good. However, it is quite a walk. We have to go down probably the longest escalators I've ever seen. Hey Penelope, good to see you. Hopefully you're well. I'm actually trying to catch a glimpse of what time the train is. I think the Long Beach line is 10:52. All right, guys, get a load of this. Look at how long the escalator is. Check that out. Now, you know what I just thought about? Can you imagine if every escalator is out of commission? I honestly don't think some people would be able to make it up here, right? Unless you're in really, really good shape. If every single escalator was out of commission, I think a lot of people would be having a really bad day. All right, so this is the main concourse where you can get the Long Island Railroad. We'll go to track 203, 204. I know, Hawaii, no, no elevators. Only escalators. I haven't seen an elevator. So something really cool here is if you look at the sort of the skylights, it'll show you which street you're at, right? Because some people don't know if they're entering the south side, north side, east side, west side. So to give you some perspective, we are now walking 45th Street. And down here, well, these are the trains. These are the LIRR trains. These are the Glengarry leads. Anybody know that movie? For whatever reason, that movie just popped in my head. And you have all the train times here. So Long Beach Line, Jamaica, Locust Manor, Laurelton, Rosedale, Valley Stream, Lynbrook, Center Avenue, East Rockaway, Oceanside, Island Park, and Long Beach.
Please watch your step getting on and off. Please be careful while riding the escalator. Please face forward while riding this escalator.
I'll quickly walk through a car so you guys can see what it looks like. You guys want to see what the inside of the LIRR car looks like? See, the Long Island Railroad's a little bit nicer. A little bit nicer than the subway, right? Not bad.
Time is 10:44. Please stand clear of the closing doors on track 302. We are on board track 302 or board at track 302. 10:59 on complement train. Now we're on track 201. Stopping at Jamaica, Elmont, UBS Arena, Mineola, Hicksville, Bethpage, Farmingdale, Long Beach.
All right, what is your rating from seeing the inside of a subway car to seeing the inside of a Long Island Railroad? What do you think? On a scale of 1 to 10. And these are the old cars, by the way. You guys haven't even seen the new cars yet. I give them a 7 out of 10. It's clean, it's nice. It's a very nice ride, the Long Island Railroad. 8. NBA Elias is like 8. Jimmy Boyle says 6. Wow. I'll walk to the end so I could show you the front of the car so you could see it. But look at how clean the tunnels are, everybody. You'll never see a subway tunnel like this. Super, super clean. And that's the front of the Long Island Railroad car. But guys, I think we covered a lot today. Next week is going to be a very busy and wild week on Wall Street. We talked about Tyson Food earnings. We talked about KKR's earnings. We also talked about the CPI report that is going to be coming out on Wednesday. We're going to hear from the Bank of England as they announce their next monetary policy decision. And we are going to get jobless claims on Thursday, I believe. And then on Friday, we are going to finish the week with the University of Michigan Consumer Sentiment Index. That can be used as a very good leading economic indicator. So if you guys enjoyed tonight's live stream and you want to come back tomorrow night at 8:30, feel free to subscribe to the channel. Leave a like on the video. If you want to connect with us on Twitter, you could follow @WalksWallStreet. And if you look in the links in the descriptions, you could sign up for our free investing newsletter. But until then, I will see you all later. I'm wishing you a very prosperous and happy start to your week. So Brick Stonewall, thank you so much. Haas Manning, Jimmy Boyles, Patrick New York, Gary Carpenter, Myra King, thank you so much. Justin S., British Gray, NBA Elias, Greg, I appreciate it. Thank you for joining Austin City Limits, Cloud Numbers. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. I'm going to catch my train, and I will see you guys right back here live from Manhattan tomorrow, 8:30. Take care, everybody, and make it a great week.